The Federal Reserve has issued multiple warnings that the US will go through some sort of recession this year. And although some analysts think that the recession could be mild, there's also some that seem to think that the recession could be more damaging. Now, the SCHD ETF offers a well-diversified basket of recession-proof stocks that should allow dividend growth investors like myself to sleep good at night knowing no matter what the economy throws at us next year, the high-quality dividend ETF will continue to pay out quarterly and continue to raise their dividends most likely. In this video, we are going to dig deep and see exactly why the SCHD ETF could, and in my opinion will, be a safe haven during the up-and-coming economic recession that many seem to think is right in front of us. Now, we are going to go over all this and more right after you please drop a like in this video and subscribe for more content like this. The likelihood that there's a recession in front of us is still rather high, and even Elon Musk has recently cautioned that things may become worse and tip into a depression in a recent interview. Now, an inverted yield curve has historically been the strongest indicator of a recession, as you can see in this graphic right here. And even though with this, it's still difficult to forecast when a recession will occur, history indicates that it could occur within the next few months or a year. Now, recessions typically occur when the Federal Reserve raises interest rates and reduces its balance sheet. And the Fed has been doing both for a while now. So it's safe to say that most of us can agree that there's a possibility of a recession ahead. So that being said, I think it's important to know what the best approach is and what to invest into before the recession starts. And in my opinion, that's to find safe haven stocks and ETFs that will hopefully rise up quickly as the recession begins and as the Federal Reserve likely starts to back off on raising interest rates. New environment begins, and perhaps we see the Fed cutting rates and even adding to the balance sheet aggressively again. So with this all being said, this brings me to the reasoning that the SCHD ETF or the Schwab US Dividend Equity ETF could do very well during the next upswing during the next few months. Let's first go over some of the basics when it comes to SCHD in the current environment. So SCHD is still down 7.81% as of year to date. And although SCHD is not quite at the 52-week range low of $65.96, it's still quite a way off of the 52-week high of $79.49. Now, with SCHD currently being at or hovering around the year-to-date low, it's giving the high-quality dividend ETF a very high starting dividend yield, which can be rare to see because this ETF normally performs quite well. Now, SCHD currently has a 3.76% starting dividend yield or something around that. That's the trailing 12-month at least. And on top of that, SCHD has a good chance of raising their dividends even higher during the next few quarters, so investors that bought into SCHD currently could lock in a very, very good long-term yield on cost. Now, the next reason that I think SCHD is going to do well in a recessionary environment is because of the holdings. As you see right here, SCHD has a very diversified basket of stocks, and the ETF tracks the Dow Jones US Dividend 100 Index, which is made up of very highly defensive companies that tend to do well in almost all market conditions. Now, with that being said, these companies all still have multiple things in common, and that's consistently paying their dividends and consistently growing their dividends over the long term. Now, when it comes to a recessionary environment, especially for a conservative long-term dividend growth investor, you want to know that your portfolio is going to be somewhat protected. And although, of course, anything can happen still, these top 10 holdings, Broadcom, Pepsi, Merck, Coca-Cola, Cisco, the Home Depot, Texas Instruments, Chevron, Pfizer, and UPS, are for the most part bulletproof companies that have long-term, consistent historical performance that will allow investors to stay calm and collect nice, juicy dividends throughout whatever economic environment is ahead. Now, another thing that's great about SCHD is the fact that the expense ratio is just 0.06%. Now, this is one of the cheapest expense ratios that you're going to find throughout all ETFs in general. And as investors like myself continue to stack more and more shares of SCHD over the long term, a higher expense ratio definitely could add up, so the 0.06% makes me really pleased to hold on to this ETF for a long time. Now, the next thing I want to go over in regards to the SCHD Dividend ETF and why I think the ETF is going to be the perfect ETF to hold through a recession or not, is the fact that the ETF's dividend growth rate has been very, very consistent over the past 10 plus years. Now, just going off of some quick data, some quick stats, we see that SCHD has a dividend growth rate on the 10-year time frame of 11.35%. Now, the Schwab US Dividend Equity ETF has a 5-year dividend growth rate of 12.24%, and a 3-year dividend growth rate of 14.05%. Now, of course, just in my opinion, I don't think that we're necessarily going to see a 14% dividend growth rate every single year moving forward. But if we were to estimate and assume, for example, that SCHD is going to have a dividend growth rate of around 10% every single year, which means that the dividends basically double every 7.2 years. The future for SCHD and the dividend is going to look very, very bright. You see, when investing into a dividend growth ETF like SCHD, you're not necessarily going to get rich and or be able to live off the dividends day one. We go back in time to 2011, which in all reality is not even that long ago. SCHD paid around 12 cents per year in dividends. The year after that, SCHD paid 81 cents for the year. And if we skip forward all the way till 2020, SCHD was paying $2.02 per year in dividends. Now that might already seem like quite a bit, but moving to current day, SCHD is supposedly going to be paying out around $2.81 in dividends for the year. That's almost an entire dollar more in dividends paid for every single share of SCHD that you own. Now do the math here. If you have 50 shares of SCHD, if you have 100 shares, if you have 1,000, 2,000, or 10,000 shares of SCHD, the extra amount that is paid in dividends per year is going to substantially help your portfolio grow in more ways than one, no matter what economic environments we are in. Now, if the economy does slow down and if we do move into a recessionary environment, we could definitely see SCHD's dividend growth rate slow down considerably. But even if SCHD was to have an annual dividend growth rate of 5, 6, 7, 8%, if you do the math, it means that the future dividends are still likely going to be very, very massive. Now, the last thing that makes me really want to load up on SCHD before the next downturn and possible recession hits is the fact that SCHD has a very strong total return over the past 5 years. Now, as investors, of course, we can't necessarily know what's ahead, but over the past 5 years, the stock market has definitely been through quite a lot. And even with the significant drops during 2019, 2020, and even over the past year now, SCHD with dividends included has returned 66.57%, where the S&P 500 has returned 67.29%. Now, the reason that this is substantial to me is the fact that SCHD does pay out a reasonable dividend along the way. If an investor were to invest everything into the S&P 500, there would be many times where that investor's portfolio would be down quite a lot, and keep in mind the S&P 500 barely pays a dividend at all. Where on the other hand, if an investor was to invest into SCHD, they're getting some high quality capital appreciation as far as ETF price, but they're also getting paid a dividend on a quarterly basis, which for an investor like myself personally allows me to stomach the downturns a lot easier. So there we have it. Those are a few reasons on why I think the SCHD ETF could be a great buying opportunity before the next economic downturn or recession kicks in. It's important to keep in mind that we don't know exactly what's going to happen next in the stock market. But during a recessionary environment, for me personally, I'm going to be looking into investing into high quality, diversified ETFs that have a long history of not only paying, but raising their dividends. Because for me personally, something like SCHD definitely matches my risk profile perfectly. But I want to hear from you guys down below. Do you think SCHD is a good, safe haven ETF to run to if we are to see a further downturn in the stock market and even a mild or moderate recession ahead? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.